Australia's housing market, a precarious stability. The Reserve Bank of Australia, RBA, has released data revealing a mixed bag for the nation's housing market. While some indicators suggest a return to pre-pandemic normalcy, significant underlying vulnerabilities persist, prompting cautious optimism and a call for continued vigilance from the central bank. The report, published on Thursday, showcases a broadly stabilized share of households falling behind on mortgage payments, aligning with pre-pandemic levels. This signals a degree of resilience within the housing sector. Furthermore, the proportion of mortgage holders spending more than their income has dipped to its lowest point since 2022. This positive trend reflects improved household financial management and potentially increased disposable income. However, the RBA urges against complacency, emphasizing the need for banks to maintain a cautious approach to lending. This cautious stance is crucial in mitigating potential risks and preventing a resurgence of financial instability within the housing market. The RBA's concerns are not unfounded. The report highlights several potential threats to Australia's economic stability, which could directly impact the housing market. A significant factor is the slowdown in trade with China, a major trading partner for Australia. This decreased trade volume introduces uncertainty into the economy, potentially affecting employment and consumer confidence, factors that can directly influence mortgage repayments and housing demand. Another looming threat is the potential buildup of household debt. While the current figures show improvement in serviceability, any significant increase in debt levels could quickly destabilize the market. The RBA's warning underscores the importance of responsible borrowing and the need for borrowers to carefully manage their financial commitments. An unforeseen economic downturn, coupled with high debt levels, could easily overwhelm households, leading to a surge in mortgage defaults and impacting market stability. Adding another layer of complexity to the situation is the looming federal election. The opposition coalition party has signaled its intention to relax home lending rules if elected, aiming to improve housing affordability. This proposed policy change, if implemented, could significantly alter the serviceability buffer, potentially increasing risk within the housing market. The RBA's report, drafted before this policy announcement, does not account for the potential consequences of such a shift in lending regulations. The long-term implications of relaxing these rules are uncertain and could easily outweigh the short-term gains in affordability. A careful evaluation of the potential risks associated with such a policy is crucial before any implementation. The report's release coincided with the imposition of a 10% tariff on all Australian imports to the US, a move by the Trump administration as part of a broader global tariff regime. This development, while not directly addressed within the RBA report, as it was drafted prior to the announcement, presents another significant economic challenge. The 34% tariff increase on Chinese-origin imports further exacerbates the existing trade tensions, adding pressure to the Australian economy and potentially impacting the housing market indirectly through decreased export revenue and economic uncertainty. The RBA's decision on Tuesday to maintain its key interest rate at 4.1% adds another dimension to the complex landscape. While this decision aims to balance economic growth and inflation control, its impact on mortgage repayments and borrower affordability remains a key consideration. The continued high interest rate environment, combined with the existing vulnerabilities within the housing market, necessitates careful monitoring and a proactive approach from both the RBA and financial institutions. In conclusion, the Australian housing market exhibits a fragile stability. While positive indicators like reduced mortgage arrears and improved serviceability are encouraging, significant risks remain. The slowdown in trade with China, the potential for increased household debt, the proposed changes to lending regulations, and the impact of global tariffs all contribute to a complex and uncertain outlook. The RBA's call for cautious lending reflects the need for a proactive and measured approach to navigate these challenges and maintain the hard-won stability in the Australian housing sector. Only time will tell whether this cautious approach will be enough to prevent a return to the uncertainties of the pre-pandemic era. The coming months will be critical in determining the long-term health and stability of the Australian housing market.